It's an election year. And from the perspective of an election year and typical seasonal trends, are the markets performing as expected? Are they not? Is there anything notable we should be looking for when it comes to a macro environment heading into an election year?
Well, many, many years ago, people used to talk about the political business cycle. So there was a tendency to have stronger growth in presidential election years and then recessions around the time of the midterm elections. The political business cycle really hasn't worked, though, in the last several decades. It really hasn't been much of a thing. We had consistent growth throughout Clinton. We did have a recession early in the second Bush administration, but then we had the global financial crisis during a presidential election year. We had pretty strong economic growth from 2010 up to 2020, when the pandemic struck. I don't really think the political business cycle is much of an issue, but we did publish a paper recently that looked at whether or not markets are more volatile in presidential election years. It turns out generally that's not true if you exclude 2008. 2008 was kind of a special exception because you had Bear Stearns collapsing that March, Lehman Brothers collapsing that September. You had the banking bailout in October 2008. So you had this huge rise in volatility. If you take out 2008, there's just really not a lot of trends around election years that make them look very exceptional. The one caveat, the one thing I would add though, is in the aftermath of a presidential election, in the days after the election, once the results become known, you can have massive sector rotations, which we had during the last two presidential elections. So I would look for a lot of sector-related volatility when it comes to November.
I agree with you. I mean, 2008 obviously was the one-off, was probably the busiest year of my trading career. There's not been another year quite like it. I mean, COVID was kind of close, but even that, those of you that traded the COVID year is nothing like 08. 08 was unbelievable. I agree with you. It's not leading up to the election, it's after the election, because, and this is one of the key things when you have futures markets like you guys do at CME Group, all of the commodities, what's going to happen in interest rates, a lot of that stuff coming from different possible policy changes or policies staying in place. That's when you start to get movement across the board, and when people start to think, what is the next president going to do? So I agree with you. I think it really comes after the election. I think it's going to be kind of business as usual for markets up to it. Like you said, it might be a little bit more volatile, but ultimately afterwards, it'll be interesting. Energy markets will be a place that I think is going to be very much a central focus following the election.